Mark, Anna mentioned the oil price. They're not as high as they began the day, oil prices. They had been flirting with $120 a barrel. Brent's now at $107 the barrel. On this report that G7 ministers will be discussing a possible joint release of oil reserves. But you say that the relief will be short-lived. Why?
Yeah, I mean, look, only as recently as Friday afternoon, so the last kind of trading session, Friday afternoon in Europe, people were saying, if we get to $100 a barrel, that would be really, really bad for stocks. At the time, we were trading below 90. Well, now we're hoping that oil can fall below $100 a barrel. And bear in mind, we're only one trading session later. It's quite bad out there. I actually think that stocks are trading amazingly well so far. And you've got to remember that away from the fact that we've got this inflation shock coming through from energy prices, coming through from fertilizer into food chains, coming through from the delay in other supply chains, because obviously the Middle East is a major air freight route as well. We've also got private credit woes, which are now going to have an inflation shock and higher yields, which is going to exacerbate that. And we got a terrible jobs report out of the US. So I have to say, short term, it's very bleak. Now, this is not to suddenly go crazily doom-mongering. I reiterate that until a few weeks ago, the tailwinds for this year were incredibly bullish. And so most of them haven't gone away. There's still massive fiscal spending. We've still got relatively easy monetary policy out of the US. We had okay growth until this factor. But this is a major risk event happening right now. And until the Strait of Hormuz is sustainably looking like it's going to be open, sustainably I should say, this is going to keep on getting worse and worse. So I think this week's going to be really, really bad for stocks, because I don't see where we're going to get that visibility of an open Strait of Hormuz anytime soon. So I think it's going to get much worse this week.
And Mark, you were consistent in calling out the complacency that you saw in the equity markets last week. To be clear, do you see a less complacent equity market now? And do you continue to see the same dynamics that playing out this week, in that Asia is hit worse, then it's Europe, and then it's the US, which has relative resilience? How do you see that dynamic shifting through this week?
Yeah, it's a good question, Tom. I actually think complacency is still very high. I'm still seeing the same complete divergence in narrative between geopolitical experts who go, we have no visibility to where the end of this war will be. We don't see why it'll end soon. We don't see what the end, the end game is planned for the US side. We don't see US, Israel, Iran showing any signs they want to stop the war. That's what I'm hearing from the geopolitical experts. Meanwhile, almost everyone in markets is going, Trump will surely tackle soon. Trump will surely want to end the war soon. He'll declare war. Now, I'm not a geopolitical expert either, but I have to say, if I'm going to listen to some random macro tourists or some geopolitical experts on the geopolitical outcome, I'm going to go for the geopolitical experts. And therefore, I think people in markets are completely complacent still. Yes, of course, we can rally very violently when we find out the Strait of Hormuz will be open sustainably. I just don't see why that's anytime soon. And therefore, yes, I think stock markets in particular is where the most complacency is, and much downside is ahead.